Welcome to the TheoTRADE chat. It's Don Kaufman here. It's a Tuesday morning, April 16th, 2024. SPOOs are massively unchanged this morning after some pretty wild volatility yesterday. I'm going to start with right off the bat, what you should be paying attention to. First of all, if I hear one more person come in here and start talking about either the Fed, which somebody just posted, who cares? You realize the Fed's actually speaking about Canadian monetary policy. You can't make that crap up. Anyway, don't worry about the Fed. Who cares about the Fed at this point? You're in some heavy volatility. By the way, the other thing is like geopolitical risk. There's nothing you can do about it, so you just learn to live with it. I mean, geopolitical risk is not the reason. I mean, yes, it's a reason for some additional volatility. It's not the reason for this volatility, right? If there was geopolitical risk, you think the bonds would be selling off like this, right? This is taking on a mind of its own. And this is what you want to pay attention to right now on the screen, because I don't care what you think about the S&Ps. It doesn't matter what anybody thinks about the S&Ps. It matters what's going on inside of the bond market, and that is downright ugly at this point. So if you bring up the TNX this morning, we're going to open up close to 4.7%. It's getting wild out there. Look at the 5-year. The 5-year is actually it's right there with it. So the 5-year and the 10-year are within basically nominal, 0.9% over there. Sorry, 9/100ths over. It's just crazy how close the 5-year and the 10-year are. I'm actually surprised the 5-year is rocketed in the just literally the last few hours here. Anyway, with that, you're going to come into a cash open. There has been some decent sized volume in the overnight trade. We're doing almost 400,000 contracts. The bond market is absolutely rocking, over 200,000 contracts, some of the highest volume we've ever seen in the bond market really in recent history. So kind of check your baggage at the door. I mean, yesterday, I don't think anybody thought a reversal was coming. I said right off the bat, you're going to, yesterday we saw high degrees of correlation. Today, it's going to be a slop fest at the open, not because it's going to be a slop fest, but because the futures are rather unchanged. There's not any real leaders this morning other than, if you look at the energy sector, it's taking a little bit of a hit. The financials this morning, which a lot of earnings have come out in here, they're all over the place. So just forget it. Like you're not going to have a feel for it. When you look at some of the big tech stocks, like Microsoft has a mild bid, and Meta, it's actually down very, very slightly. And then Apple is kind of caught somewhere between down very slightly. Nvidia has a very mild bid. Tesla's being sold a little bit here. Again, we're completely scattered, but don't think we're not going to, just snap back into correlation here in a matter of moments. So we're going to come into this cash open. Again, as I said yesterday, and I'll say it again today, you're in volatility right now. So check what you're thinking at the door. Come in here with an open mind because things can get wild in a hurry. Let's come to the bell. So we're looking for a completely scattered advanced decline line, and that is exactly what we are getting today. There is selling going on in the Nasdaq instantly. The overnight low is trading all the way down to 50.81. That's something I think you should maybe anticipate. We're going to retest. Take a look at the Russell. The Russell is really feeling it with the much higher interest rates. So the Russell is, if you haven't looked at the last couple of days, let's go to the IWM immediately, because the IWM is getting hammered on a year-to-date basis. The IWM, which just a few weeks ago was up between just over 6%, is now down on the year. So here we have one of the major indices that's actually down on the year. How does that compare, for example, to something like the Dow? The Dow today has a bid under it, but that's strictly because of United Healthcare having earnings. So you are seeing a little bit of an anomaly inside of the Dow, just to point out. J&J actually has earnings too, but base this on last price. Look at that. United Healthcare is up $30, and with it up $30, that's the entire gain almost in the Dow. It is the entire gain in the Dow. IBM may be helping it nominally, but it's a dollar for dollar move here. So pay no attention to the Dow, but I do want to make a quick point. The Dow now is flat on the year. So we have, if you look at like four major index products, you can look at the S&Ps, which obviously is like the mainstay. You look at the Nasdaq, which is critically important. You look at the Dow and the Russell. The Dow and the Russell are either flat and down. The Nasdaq is the leader in the pack. It's now only up about 7%, but the Nasdaq just cracked a little bit out of that range yesterday. And then last but not least, looking at the S&Ps, and the S&Ps are still up about 6.7%. Nevertheless, we've broken a lot of trends in the last 2 days of trade. And again, this is something that we want to pay careful attention to, not in respect to the fact that we're seeing some sell side activity, but that volatility doesn't get out of control really at all. And we're right there on the verge of what I would term, a little out of control volatility. So that's why I will constantly reiterate day in and day out here. You got to kind of check what you're thinking at the door when you come in every day. So I just wanted to bring up the dollar once again. The dollar this morning has got a decent sized bid under it. It's just been relentless price action to the upside inside of the U.S. dollar. So the reason I'm bringing it up is the dollar this strong should really, it just exports inflation. If you're not familiar with that concept, any goods and services from the U.S. Are just, again, the cost of those skyrocketing with a U.S. dollar moving like this. Just to compare, if you haven't looked at the euro US dollar, we're back down to like 106. Look, let's not get crazy. If you look back over the last 5 years, we've actually seen the euro versus the US dollar considerably lower. But the point that I just wanted to make right here is almost like peak inflation. And we're definitely headed right now in the US dollar in the wrong direction if you want to cool off some of the inflationary pressures. But right now, more than anything, I look at the US dollar as being a place where capital is just moving from around the world. It takes a lot of money to move the dollar this much. Meanwhile, some of the usual suspects this morning let the market open, let it kind of settle out. Tesla once again is getting hit. This is it's ugly. It is ugly. This thing is so overdue for a bounce, but its earnings are right around the corner. I think that's extraordinarily difficult to be able to trade right before the earnings. As the earnings, as I was saying, were on the 23rd. Any position that you'd want to take, would have to be like this week in there, and looking for like an oversold bounce, I think is, effective, but that's just not going to happen for me. I don't, again, I'd like to execute into here. I just don't think I have enough time to do so. But I mean the expiration. I don't want to try to carry the trade through the earnings, although I may actually take a shot at Tesla in and around its earnings. So back to the broader market for just a second, and then we're going to get real specific here. Ticks this morning are negative. You'll note that I just hadn't even mentioned it until this point, and it's simply because I see a lot of movement out of some of the big tech stocks. Okay. They're fast, they're furious. I'm not seeing a lot of movement out of financials. They're like almost taken out of the equation this morning. I'm not seeing a lot of movement out of energy. So at that point, I just don't think these ticks matter very much. You are living right now in tech land, and let's just take a broader look. Microsoft yesterday took a pretty good size hit, no question about it, but is like what? Let's just be honest, maybe 2-3 days removed from basically its all-time high. Okay, look, you're that's pretty close to the all-time high. So you're 2-3 days removed from the all-time high. If you're looking on let's talk about a longer time frame for just a moment in the S&Ps. because I do read some of the chat. I just want to make everybody aware. We've gone through a period of time. We basically rallied from November to the end of March. For the most part, you've had 5 months effectively straight up. So you're now starting to see a little sell side activity. This is not me trying to bear up on you. This is me telling you, okay, you haven't even seen any sell side activity yet. I mean, it's maybe scraping the surface, starting to catch your attention. Okay, look at individual stocks though, like a Microsoft. It's unscathed. I cannot say the same about Apple. Apple is taking a beating this year. It's still down about 7%. Nevertheless, it can go a lot further, given the fact that Apple over the last 5 years it's up, okay, considerably. We look at Amazon. Amazon, if I say it's a day or two removed from all-time high, you can see some sell side starting to hit the marketplace, but just leave it alone, okay? Because we have positions on right now, and there's no heroes that are going to be made in this tape early on. Like jumping into this tape early on is futility, in my opinion. The bonds continue to get rocked. Okay, S&Ps are going to get rocked with it. We've already said that, so at this point, let it happen. If you take a look at Amazon, when I start talking about stocks that are unscathed, it's to bring up, okay, the broader reality that you haven't really scratched the surface yet of what might be plausible to the downside. And anyone that is sitting in here that thinks about dip buying, if you're dip buying or looking for a deal, okay, dip buying to me would constitute on an intraday basis only. And I want to make that incredibly clear, okay? Dip buying at this point, you're looking at it in an intraday basis. And if I'm not more clear about that, let me say this. You go out there and you think that any one of these stocks on the screen right now is a deal, you're going to get annihilated in this, right? Oh, I've really wanted to buy NVIDIA for so long. Is there a deal in here? Absolutely not. Okay. This is not the time to buy. This is like if you're a long duration, trader, you're looking for investments and so forth, this ain't the time. You're right now possibly transitioning into some pretty significant volatility. The point that I'm just trying to make is that when you're 2 or 3 days removed, okay, in one of the primary products in the entire S&P 500 from all-time highs, do not tell me that you're oversold. It doesn't matter. We can bounce right now, and that's what I'm not talking about an intraday basis right now. I'm talking about in a broader take on this marketplace. We haven't even sold off yet on Amazon. Google, okay? Google basically hit an all-time high on what? Friday? Okay. Yesterday was pretty much there. Okay. But still my heart, it sold off a little bit. You want to get into Meta? Okay. What are you? 2 days off? Every one of the major tech stocks that got us to where we presently are in the marketplace, they haven't even scratched the surface. Yeah, I'll give you Apple. Okay. NVIDIA, it's just been in a channel. It's not doing anything. Okay. What else do you got? Well, the financials, they're starting to get hammered. Okay. These are actually seeing real selling. So the financials, ironically, are seeing real selling. But take a look. Well, let me get that off there for a second. Take a look how far those financials have come. And then recognize, all right, here we've definitely started to do and maybe inflict just a little bit of damage. Okay. But it is a long way down. To see this come all the way down to like 37, where it started the year, I don't think that would be unruly. Okay. The reason I'm going through this early on is there are too many individuals or watching chat in here that are looking specifically for deals. People are already emailing in. Should I sell puts? For example, like in Microsoft, so I can get long some Microsoft because, it's going to go up forever. Okay. I'm not telling you that Microsoft isn't a good deal here. It might be. Hindsight, this thing could be into 1,000, right? I don't think so, because then it'd be like what, like a $5 trillion company? Lovely, it's more than that. The point that I am making is if you're seeing this transition to volatility right now, and you thought to yourself, holy crap, that was a relentless up move. Okay. The down move hasn't even really begun yet. And that is, I think, has to be the overwhelming discussion and has to be an overwhelming thought in your head. One thing you have not seen me do is, do you see me rushing out to sell puts in any of the portfolios? Okay. I'm just short a call over here. How come I'm not selling puts? Because I'm going to tell you right now, forget about all the geopolitical risk in here, whatever. Okay. What intimidates me, I see the bond market start to sell off. Okay. Significantly. I see gold. I don't care what you think about gold. All right. I see gold has gone parabolic. I've watched gold for years. Okay. Many years. You're not going to see too many moves like this in gold. Right. That is serious. Serious back here too. No question about it. Okay. But this is basically the most serious move you've seen in recent history inside of a product that indicates either inflation, okay, or people are running for the hills. And this one looks like they're running for the hills because they're buying gold, okay? And at the exact same time, the bonds are getting whacked. That is not good for nobody, okay? Volatility is starting to get heated up, and we're buying dollar. I think the scariest thing about gold is that gold is going straight up with the dollar going straight up, which you realize if the dollar were going straight down, gold would really be going parabolic. It is amazing, though, to see, all right, some of these phenomenal moves on the screen. And again, you got to kind of check your baggage at the door and just at times like this, look at the broader chart. It's okay. And I wanted to start with that this morning because there's too much of what we just went through over the last 5 months. Clear the deck. No one gives a damn, and neither should you. When I see that, I'm saying it with all due respect. You anticipate that people are going to come out and buy dips. Okay. Look, dynamic hedging. You sell off, you bounce a little bit. Maybe we're all overdue for a bounce. That's fine. Okay. But if you have the assumption in your head any longer that the market just goes up and it only goes up, you better clear that out of your head because this is where retail traders get damaged badly. Okay, mark my words. This is where people take on some serious damage. And what happens on days like this, you see a reversal yesterday of epic proportion, which we handicapped to a T. I mean, yesterday morning I came in here and I'm like, we saw an advanced decline line yesterday that was basically 98 stocks to the upside. As I said to you, it wasn't a bullish connotation. It meant the market's going to move cohesively and actually increases the probability of reversals. Okay. Ironically, you're seeing it start to come off a little bit, but neither here nor there. So yesterday we handicapped what became a pretty significant reversal. Okay. But what we start to get into now is the notion where people are looking for this marketplace to bounce. Okay. Don't get me wrong. It can bounce and it can rip back to the upside. But what happens to a lot of retail traders is they get stuck in that notion that's all they're looking for is the bounce. We bounce for a few minutes and then get annihilated. We bounce for a few minutes and the same pressure that was on the buy side can get reversed. Okay. And all of a sudden you feel like every single bounce is being sold into. Okay. You know why that happens? It happens because people just like you, every bounce, they're like, that's it. I made good money over the last 5 months. I got to get out. I made good money over the last 5 months. We haven't even begun that cycle yet. And it's coming. Unfortunately, I think you're starting to see us get trapped in it. The reversal yesterday was a pretty good indication. And that's more psychology of the marketplace. Like I can't base that on anything in price action or anything definitive. But I've seen this one before where you go from buy at any price and make money to every time we bounce, they're going to sell into it. And they being you. So very, very important, okay, that we kind of get a feel for what could very rapidly become an ugly marketplace where you feel like you're just falling into the abyss. And the reason I'm also taking a little bit of time this morning, first of all, I'm letting the marketplace kind of evolve. Is it evolving enough for you? Okay. It's evolving into a crap fest again. The bonds are stabilizing right now. The next thing worth mentioning this morning is right here. These volatility futures, okay? We're right at the point where the May vol futures are almost even with the June vol futures. We're within 20 cents right now, okay, of an inversion. If we start seeing sell side activity today and we invert, and I'll show you this graphed out, okay, so I can actually pull a chart on this. If we invert, all hell breaks loose. All right, you're going to have a day that, you know, you're going to, mommy. That's basically what happens when the first time these things invert. And I'm going to explain exactly why here momentarily before we go into the volatility futures. Back to the S&Ps. And again, you're not going to see me like, look, it's a 16-point move today, right now, 15-point move. What's the expected move on the day? Anybody? This is the kind of crap before that bell goes off. You should know what the expected move is on the day, because the only thing that matters, right, in volatility is movement. It's plus or minus 46.33. Okay, and that is the daily expected move. Once again, that's a huge number, because if you're looking over here at a 15-point move, it's not even a third of it. Doesn't even make a difference. Who cares? This is just noise at this point, right? It's basically, I like it. It's basically 50 bucks, but it's 46. And you know, if you ask where I get it from, okay, where did you get that crap from? Let's go over here to the SPX, go to the analytics. Okay, come on, SPX. Go to the 16th. There you go, 46.33, right there. Okay, so you're on a very significant, okay, a very significant expected move. The next thing I suggest you do on a day like today is give yourself orientation. Where the hell are we on the week? Because the week was expecting $100 move. I mean, basically the expected move is $100. It's plus or minus almost 100 on the button. I think it was 136. Yeah, it's 100.36. Anyway, it's about $100 expected move in the week. Look where we are, right? Now, okay, you want to zoom that in even on an intraday level. Why? Because we're trading at 47. The lower edge of the expected move is 23. Okay, so we're within about 20, 25 points of the lower edge of the expected move. Any closer to this, like if we start getting down just a little bit further, you know, 35, you're going to get sucked right into the edge of the expected move. Okay, I suggest to you that this right here is a fairly critical level inside of the S&Ps. Okay, and it's critical not because it's 50.49. Nobody gives a damn about that. It's critical at this level because anything really lower than this, like if you get to 50.35, okay, get to 50.35, just going to push it right into the lower edge of the expected move. And who's they? It's hedging activity, because in the midst of heavier volatility, what matters more than anything, okay, it's not a buy the dip, it's not this, it's not anything. What matters more than anything, okay, is going to be hedging activity. Now, somebody was saying, can I look at the Nasdaq? We can, but inside of Nasdaq, the expected moves are not going to reverberate and resonate nearly as much as an SPX. And if anybody's curious as to why, first of all, the expected move is all about volume in the product. So if you look at the SPX and we look at volume in the product, nothing really trades more notional value than this. Now, contract size, you go, oh, it's only trading 300,000 contracts. Take a look at the spiders, okay? If you look at the spiders are already trading almost 1 million contracts, which is pretty amazing for 20 minutes into the day. These things have traded 1 million contracts. 1 million contracts though, but the SPX is 10 times the size. So if I go to the QQQ, the Q is the Nasdaq, right? it's only trading about 450,000 contracts, but it's a $430 product. The NDX, what's the NDX trading? Like nothing. Point that I'm trying to make is very simply, okay? Look at this. This thing's trading next to nothing. The point that I'm trying to make is a really simple one. Expected move, okay, is not about the number. I mean, it is to you, but expected move is really about, okay, skin in the game. All right. It's about skin in the game. By the way, somebody said Wayne was saying his expected move is 42. Yeah, you're looking at the wrong one. You're looking at the expected move in the live platform. Okay. You got to look at expected move the night before, the static expected move. Like what was the market, okay, looking at in terms of price action yesterday at the close, because that's when everybody rolls the positions over. Most important thing to know about expected move, okay, you can use the intraday expected move to handicap forward risk, but that doesn't mean the overall movement of the day. What matters in the movement of the day is here in the analytics under think back. And again, if you don't have think back, you just write this crap down. And some people had it at 50 bucks. Okay. My guess is if you had this number at 50 bucks, that probably came from Corey or whatever. They just take it at 4 p.m. It's not at 4 p.m. It's supposed to be at 4:15. Okay. 4:15. But some of the guys, they usually are talking about it right into the close because Corey's on into the close. Anyway, the official one's 46. And I get dead accurate with that stuff because, again, as I was saying, like not to diminish the NASDAQ in any way, shape, or form. The NASDAQ definitely carries some weight. But when it comes to volatility, right, the only thing that really matters is size. No one gives a damn about like, a number on a screen. Oh, the expected move, like to calculate the expected move in the QQQ, what I do is I come in here and I'll look at this. It's basically $5, just rounded to $5. Okay. So like, look, it's $4.99. It's $5. Multiply it by 40, right? It's $200 move. So the NASDAQ futures are expecting a $200 move. You go, why do you multiply it by 40? Because the QQQ is 1/40th. Okay. It's 1/40th of the NASDAQ. All right. And if you're kind of curious about that, just go in here to a calculator. So it's a $431 product, 431, multiply it by 40 equals 17,240. You look over here at 17,863. You're wrong, Don. I'm not wrong. There's cost of carry built into this monkey. It's just cost of carry. Okay. So there's a price differentiation of a few $100s because of cost of carry. If you looked at the QQQ, versus NASDAQ 3 years ago in a zero interest rate environment, they were much closer. Yeah, we good. Oh, this is mine. Okay. All the coffee in the world. It's not bringing me back. All right, let us continue over here. So some specific stuff again to discuss. All right, next thing on the docket. We've had some pretty good size moves, okay, in the last couple of trading sessions. No question about it, right? If you look at like a 30-day 1 hour, it's pretty expansive volatility, some wild reversals. I mean, yesterday, okay, yesterday's a big boy move. We actually peaked out here at 52.11 and ironically sold off to basically 51.11. So it's about 100, it was more than a 100-point reversal, but just put it at about a 100-point reversal, okay? But there's still a problem there. And here's the problem. We're seeing moves in the S&Ps that feel phenomenally large because we've been reversing into them. I'll say it again. We feel like the moves that we've seen lately are phenomenally large. I mean, look at the candle from yesterday. My, what a large candle you have, because it's 100-point, range on the day. But therein lies a problem. By the way, I'm not discounting the ability to rally today. Again, I'm checking that at the door. We got to look at the bigger construct first here and spend some time on it. Anyway, as you look at the S&Ps, one big issue, at least that I have, we haven't seen, okay, the mother of all moves. We haven't seen a 2, a 3, a 4% move. And I think that leaves me a little bit uneasy. Look, you don't have to have a 3% move, but okay, statistically, you get X number of those moves in a given year, and they usually come, okay, when we're seeing more volatility. So with this being said, okay, just be mindful that we're a $5,100 product. A 1% move is, 50 some odd dollars, 2%. Okay, by the time you get to 3%, look, it's a 150-point move. You haven't seen a 150-point move. You have from absolute high to low. Well, you haven't even seen that. But the point being is, okay, you're not going to get a good feel for that until it basically hits you. S&Ps are reversing right now. There's going to be some traffic right here at the 5111. So even if we rally back up, you're going to get caught right up here. We'll see if we can actually pierce through it. Okay. The bond market stabilized for a brief and fleeting moment. It's not over in the S&Ps just yet, but the bond market kind of stabilized. As the bond stabilized, the S&Ps rebounded a bit. Take a look at the lows of the bonds. Lows in the bonds were 636. Okay. Lows in the bonds were 636. Okay. A few minutes later, a little bit more sell side activity, but the S&Ps kind of stabilized. The financials, okay, got a little bit of a bid back under them, but all tech is predominantly bid right now. NVIDIA kind of leading the pack. Let's go look at NVIDIA. Very, very minimal call buying going on in NVIDIA. I'm rather surprised that it's up as much as it is. And this is exactly the point of why I discussed what I did earlier, that the notion, okay, that, the dip buying is going to happen and they're going to come in here, okay, we're an oversold. We could absolutely bounce. The S&Ps could rip 50 points today. But if it happens early, you can't discount the ability for us again to see the marketplace roll over. There's just a lot of volatility in this market, and I don't think you need to trust it as far as you can throw it, because the attempts at dip buys over here, there's a lot of traders that are going to want to sell into this. Okay, I mean, how many of you, if you're listening to this right now, how many of you, you're nervous if you're long? Not necessarily out just yet, but you're definitely nervous. When I say if you're nervous if you're long, I mean if you own NVIDIA, okay, you're nervous right now. If you own Microsoft, okay, you're nervous. You saw a big move yesterday, kind of broke that trend of that channel. You're nervous. And a lot of people that are nervous, the first time we rally back up, they hit the sell button. Okay, they were waiting for that move back to the upside, and you're going to see constant intraday reversals here, where they bid them back up, and then we flip back over. Okay, that appears where we are right now. And again, I know that everybody wants to talk about but it's geopolitical risk. Look, if it's geo risk, okay, then why is energy getting hammered the last 3 days? Don't listen. Geopolitical risk is already priced in here, and that could proliferate. There's probably some degree of the dollar, okay, that has geopolitical in it. There's some degree of oil, okay, that's got geopolitical, but oil, since the geopolitical risk heated up, oil hasn't. And I just want to make that point, because you're just getting drawn by media out into this peripheral that no one gives a damn about that are trading. Okay. The only thing that traders see is right in front of them. And I'm telling you, okay, now geopolitical, push it aside. Again, it could become center stage again if things get heated. But right now is about the bond market. Because you keep doing this to the bond market, you're just going to start to break the backs of the entire economy. Start snapping a couple of banks. If you see sell side like this in the bond market, it turns into panic. Okay. Panic, not good, because banks may have to get out of positions. And unfortunately, people have been there before. So no one's in that position. No one wants to come forward and go, I'm scared. Okay. All right. Let's make sure we're good. As I was saying a moment ago, okay, on days like this where, I mean, I literally saw somebody already come into the chat room. Here come the dip buyers. Okay. Every time that you think they're going to come in and buy that dip, immediately the selling will start to persist again. Like we can rally and we can rally 50 handles, but literally somebody's going to come in and reverse that marketplace at some point. Not going to be, there's no more one-way tickets here. You cracked volatility wide open. And I'll tell you a lot about volatility, but there's one thing I'm very specific. You can handicap what the rest of this day looks like. Okay. I mean, it's just pure guesses, right? You can handicap a few minutes maybe out. Okay. You can get ahead of the volatility and say, like, hey, if this volatility continues, Microsoft's going to be a great short. I know the earnings are there and it's a pain in the ass, but the proof is in the pudding over here. By the way, I'm eyeballing Nvidia because it has not been hit and its earnings are further out. So if volatility continues, Nvidia is going to get smoked. Okay. We just haven't seen it yet. And again, one of the things that keeps coming to mind is every time I look at the S&Ps and I'm like, man, they're starting to get hit a little bit. I look over at tech and I go, please, 2-3 days removed from the all-time high. All right. You can't exactly call this a marketplace that's even seen selling. For those of you also, if you're into technicals, okay, I'll bring up RSI. Okay. On the daily, I just want to show you this in the QQQ in the daily. This is actually the RSI Laguerre. It oversold. Okay, oversold. The fractal energy though is extremely high. Push that aside for a second. Then you actually come into the weekly. Okay, in the weekly, it just now hit sell side activity, meaning that it's just now the ding that you heard when I changed the time frame. I'll do that again because you guys will appreciate this. Okay, the daily is showing a little bit oversold. In the weekly, this means sell. That means the ding, okay, is actually like, oh, okay. It's also, I wanted to show you something interesting in here. For those of you that do follow like fractal energy, it's basically the highest it's been. You're starting to see sell side activity in the highest that fractal energy can actually move, which basically you're primed for a big move. I don't use that stuff. I use more of expected move, but I'm very familiar with it. And expected move is like, holy crap, we're already sitting at the lower edge of expected move. We have not, categorically have not seen a major breach of anything this year to the downside other than in the Nasdaq. The first week of the year, we broke to the downside. Minimal breaks in here, okay? We're right on the lower edge of expected move already in the Nasdaq, and you're ready to rumble. This is going to be good. So no, the RSI Laguerre was actually a buddy of mine that put this together. Somebody's asking about it. Buddy of mine put this together, and another guy actually latched onto it. It's actually a client that had the RSI Laguerre, and we had them throw the fractal energy in there based on a buddy of mine that had done quite a bit of research about this, right? I mean, I told them, I said, put together a study that has some of the best, testing capabilities of anything, and they immediately threw together this RSI Laguerre. Anyway, so on the weekly is a sell. Hold on the monthly. Okay, I want to show you on the monthly. On the monthly, it's still an overbought condition. I just wanted to bring that up because it'll remind you, we haven't really done anything yet. I also brought it up on Apple. Okay, on Apple, again, on a monthly, okay, Apple is just starting to see sell side activity. Okay, and it's already fallen, you think, quite considerably, but it's pretty nominal. Let's continue onward and upward from here. Okay, so we talked a little bit about geopolitical risk. We're going to talk about a few of the stocks that had earnings today. Let's actually run through a couple of stocks that had earnings, a few of the positions. Okay, this is United Healthcare. United Healthcare, the reason I'm bringing it up, again, it's earnings. It is what is driving the down. Ironically, the Dow would be down considerably on the day if not for United Healthcare. United Healthcare, what was it expecting in terms of price action? Survey says 23 bucks, actual move about 27. Do not be surprised to see this thing flow just a little bit lower than it is. United Healthcare opened down here, was basically sitting, okay, very close to the upper edge of its expected move. Again, this is possibly a trade opportunity for those that understand. Okay, it'll come right back down, for instance, to that $23 move. So there is a trade within here that you might be able to grab like $4 out of for those of you that are capable of doing so. That's one of the reasons I wanted to bring it up. The next one on the docket, J&J. Okay, J&J taking a little bit of a hit here. Look, Johnson & Johnson's not too exciting to discuss. Year-to-date basis, though, the hit's starting to get real. Okay, the expected move in there is basically $4 and change. Actual move right now, 318. Nevertheless, okay, it's got some more movement to the downside plausible in it. Onward and upward, the next big one, Bank of America. Bank of America's got earnings. Bank of America, which I'm just going to show you after the numbers came out this morning, had a huge bid under it all the way to 37. It's fallen flat on its face. It's a huge range on an intraday basis here. Let me just bring this one up for just a second. Bear with me here as you're seeing Bank of America now down $1.24. Look, it's not too exciting because it only had like $1.40 move. It's basically moving right to where it should be. Okay. What is exciting though in here is how significant the reversal happened to be. That reversal is actually hurting most of your financial sector. Okay. On the flip side over there, I think Morgan Stanley had blowout numbers. Morgan Stanley had blowout numbers, but frankly, if you look at the size of Morgan Stanley is $146 billion company, whereas Bank of America is a $275 billion company. You'll get that Morgan Stanley doesn't mean squat on the bigger picture. So it's close that crap up. Anyway, Morgan Stanley had about a $4 expected move, actual move about $3. I just find it interesting because Morgan Stanley isn't even moving as much as it was anticipated to. It hit the expected move and faded from it. Okay, so it did what it was supposed to do and faded a little bit from it. Nevertheless, okay, that's kind of earnings in a nutshell. Everything today was kind of in or around where it was expected to move. So it's good stuff. It's good stuff. All right, let us move onward. Sorry, I'm just reading reading some of the news out there. Okay, today, I know that it's been the talk of the chat room that you do have Federal Reserve chairperson Jerome Powell. Okay, just to clarify this, Federal Reserve Chairman Jerome Powell to participate in moderated discussion before the Washington Forum on Canadian economy. Yeah, it's going to be exciting. Okay, why the hell are people even bringing this up? All right, they're going to be talking about the loonie. Okay, whatever. What's he going to say? Look, the Fed Fund futures have spoken. The Fed Fund futures have spoken. They're not doing anything right now. We'll start talking about like rate cuts probably the end of summer, like when they do Jackson Hole. When they all visit Wyoming, maybe that'll be the first time they really start to make rate cuts. But I think that this is passé at this point. There's nothing else really coming out this week. Look, on Wednesday, there's no data in here on Wednesday. Okay, Thursday morning, I mean, we're going to be hunting for stuff. Jobless claims, ooh, but still my heart. Nobody cares about leading indicators can move markets a little bit, but probably latch onto that, and then nothing on Friday. What I wanted to point out, this marketplace is kind of left to its own devices this week, and I like it. It's left of its own devices, which basically means there's no data coming out. Geopolitical risk is there, no question about that. But things could get a little bit crazy. Now, positions. Yesterday, I closed an in-out spread. For those of you that were in it, it was the QQQ. Okay. What was interesting about the QQQ spread? Opened. Okay. Well, opened and closed, but it was a 30% gain. One of them I actually got into literally, I bought it yesterday and then sold it later in the day. I was in the trade for 3 hours because I did buy one yesterday right here at 77 cents and sold it just a few hours later. So we are out of the contest on that one. Just be aware of that. Okay. There's nothing else really going on this week. Okay. Somebody was mentioning the OPEX. The options expiration is Friday morning. It's just a primary expiration. There's nothing to, other than there's some decent open interest in a few of these strikes. That's not going to impact markets. Okay. That's just not going to impact anything. It is a primary expiration. I mean, there's more open interest in stuff like Microsoft because this is a primary expiration. There's more open interest in a lot of the equity products, again, because this is a primary expiration, but I don't think that's going to make any difference as the volatility kind of starts to bleed through in this broader marketplace. So the QQQ, we're over and done with. So now I'm shopping for more in-out spreads. Honestly, I don't exactly know where to go just yet. So I'm going to shop for in-out spreads. We've had a couple of decent ones. We'll see if they continue. We've had a few bullish, a few bearish in here. I think we had one bullish, which was here in the XLE, 3 bearish. Bearish trades work, not because we draw came down. Bearish trades work because we're seeing some volatility. AMD. I wanted to bring this up. I wanted to bring up a couple of these stocks. This is Broadcom. Broadcom maybe looks a bit like NVIDIA. AMD, okay? AMD and chip stocks. This does not look good. For those of you that have watched this stock, okay, pretty parabolic move, both from last year. Peaked out here at 227. It's already reversed substantially. Nevertheless, okay, today, somebody upgraded it, I think today. Anyway, today it's still sitting though right at this 160 level. Okay. I can't trade it right now because there's earnings coming out and that's going to be, but a break under 160 could be devastating. And this could actually take quite a number of the chip stocks with it. Taking a look at Intel. Okay. Why is that not coming up? Taking a look at Intel. Similarly, there's been a significant break in some of the chip stocks. Okay. The reason that I'm bringing those up, we have not yet felt that in a product like NVIDIA. NVIDIA just chip stocks are clearly differentiated from like an NVIDIA, which is thought of as like the AI stock, even though NVIDIA themselves are not involved in AI. Okay. Moreover, if you're kind of questioning that, Intel came out and said they have a much better chip than NVIDIA can make, or I should say another GPU, then Intel is going to be a definitive competitor to NVIDIA. We'll see what actually comes of that because it didn't help Intel stock. Anyway, less than exciting right now inside of the S&Ps when we have, a $46 expected move and we're not doing anything. S&Ps right now are meandering higher, but the Nasdaq's starting to catch a little bit of fire. Take a look. Your Nasdaq right now is brought to you by NVIDIA. Couldn't have happened to a better stock. These are tough mornings at times to trade. I caution you though, this marketplace could get wildly bid. The advanced decline line could be flying high, and then we could reverse. So you're going to have troubled trade all throughout the course of today, with threats from the bond market. If the sell side activity continues, again, the bond market bidding up. There's not really any economic data. There's just not much to go on today, right? So as long as there's not much to go on, the markets can float a little bit higher. Okay. Timothy was saying, is there a scan for in-outs? No. I mean, look, you can always scan for stuff, But the first thing is I want to find stocks that don't have earnings. Probably leads me to a lot of the ETFs because almost all the usual suspects, I'm just bringing up to a quick point, all the usual suspects have earnings. Like I know off the top of my head, like a Walmart, it's not in the earnings cycle. Walmart is a consideration because Walmart has been, I mean, I think that this is threatening to go lower, but it's got a pretty solid bid under it. I've been looking at stuff like Nike. I know Nike, all the retail stocks are already through earnings, right? Okay, or have their earnings scattered about. They're just in a different cycle. Nike, this one actually could be bid back up. We'll see. So here's a stock that's been absolutely annihilated. Could get a bid back under it. As I said, we'll see on that particular front. But I'm shopping around a little bit in retail. Costco, plausible. Okay, Costco saw some sell side activity. Any follow through sell side activity, by the way, the dividend would not negatively impact us. So that's plausible. Again, I'm shopping for in out spreads in places that don't necessarily have earnings. Mark was actually asking, am I considering selling puts in the bond market? Yeah, but we're not there just yet. Okay, because I have actually priced a couple of these and I'm opening some stuff up and I'm shopping. By the way, if you look at the bid offer spreads in here, 66 days out, they're nuts. We're in a weird place in the bond cycle where only these like 38-day options, okay, are really pricing. Bonds can sometimes be a little bit challenging. You'll see the 101-day stuff though is trading. This would probably be how far you would have to go. You'd probably have to go all the way 101 days out. But I have no qualms in saying, okay, that right now, if you sold puts in the bonds out about this 6 or 7 delta, could get crazy, man. Okay, you better be able to hold a bond. But look how far out I am. I'm at the 101 strike or the 100 strike. Okay, in any recent history, 107's been the lowest that we've seen. Okay, so could something catastrophic happen? It could, but my thinking is, even if something catastrophic happened, I think I'd still want to buy the bonds at 101. Yeah, I would think that you could allow the bonds to be put to you at 101, and I think that that's a very reasonable position. I'd like to see though how today kind of plays out. I recognize the bonds have kind of meandered back up, but the day is young and Jerome Powell, will speak. And I tell you what, Jerome Powell speaking, what he says to me is unimportant. Okay. It's what that order flow is in here. And that order flow could come screaming. Okay. Look, the bond market has been so wrong this year. It's amazing, right? We started the year up here. Look how far we've come down, right? Or, you know, everybody thought rate cuts were coming in March. Okay. We're already in what? April, May. There's no chance of a rate cut in June, July. Please. I think they have July right now as one of the live meetings for a rate cut. I don't think it's going to happen. Okay. The only way we're cutting rates at this point is if something catastrophic happens. Okay. Not in the world, but specifically our economy. And I don't think we're there. I just don't think we're there. Okay. Somebody was asking about one of the TheoTHETA positions. We have 5150 calls. Okay. They have matured quite nicely versus where they were. If you look at the TheoTHETA portfolio, TheoTHETA small, we still have the 50/50s on. They have 122 days. Okay. They've gained substantial premium. These 50/50s though, they're the at the monies. They're not going to be rolled yet. And we need some sell side activity. Okay. And you're starting to get it. Doesn't mean that it's going to continue, but we're at least headed, in the right direction for some of these portfolios. If you're kind of questioning, why am I not selling puts? I got to tell you something. In a catapult portfolio, 2 things I did yesterday in a catapult portfolio. Number one, okay. Number one, I already covered puts. So I had a Boeing position on yesterday and only a very, very small profit. I took the small profit. And, a couple of people sent me an email. Why'd you take the small profit? Because I did it yesterday when the S&Ps were up, okay, like 40 points. They were starting to reverse, and I'm like, they're going to come back down. So I covered and bailed out of the Boeing position. Right now, you will not see me selling a lot of puts. Okay, you just won't, because I'm telling you, you've seen a marketplace reverse, but you haven't seen it get angry yet to the downside. We haven't seen volatility invert, and even with some of the selling going on over here, okay, look, this is not a time to want to sell puts. This is time to let some of this volatility play out. Again, the geopolitical risk isn't even in scope over there, because everybody will point to a war broke out and that's why the marketplace tanked. How about, okay, the marketplace was already seeing volatility well before it saw any of that. Okay. There's definitely moves going on the screen that are geopolitically motivated, no question about it, right? But you look at oil, okay? Oil, the geopolitical risk, maybe it already priced it in back here. Somebody was just asking about defensive stocks. That trade's done. You can look at the Raytheons and whatever, but it's done. General Dynamics, okay? When I say it's done, like you'd be the last guy in, because energy stocks are even reverting back down. Everybody that needed to get into energy stocks were already bid before geopolitical risk. Let's assume that right here is where geopolitical risk kicked in. That's the move. And all of a sudden, where are we right now? Right back. Okay. Some big moves going on though. But that's why I say the geopolitical risk is a catalyst in a marketplace that was already, ready to roll over. Really important though to be able to discern that. Now, somebody was asking about Caterpillar. Yeah, I would love to do something in Cat, okay, but its earnings are right around the corner. Caterpillar looks like it's going to tank. I still am carrying positions in Caterpillar. Make no two ways about it. I'm getting killed in here. I'm down 50% Caterpillar. I've made good money in here. I've lost good money in here. Okay. I think that what I made in Caterpillar, okay, over the years, I think I've barfed back in this latest move. I'm down 50%, but I'm still in the position right now. Okay, I think the only thing to do in Caterpillar would be an outright short, or what we call a duration position. And a duration position would imply that you went out like 66 or even 90 days and you used like an 85 delta. Okay, you could use like these 410s. You buy a deep in the money put, which is a synthetic short, and you just ride the pony down and you just keep rolling it. There's a whole class on that one. There's a class on getting short and collecting income. That is how I would treat Caterpillar at this point. I think it really is, and I appreciate you asking me to pull that one up, because I think it is an excellent opportunity at this point. Okay. Nevertheless, I think it's also a little bit more capital, okay, intensive than most of the trades would be. So pretty mellow morning, at least for me. And again, I'm not surprised. I came with a lot of notes this morning because I wanted to make sure that everybody understands where at least I see us being in this marketplace right now. And if we're oversold, so be it. But we're oversold over the last 2 days. Okay. Consequently, in a longer duration, we haven't even begun to sell yet. All right. Here's the monster of tech. The monsters of tech is a symbol I put together. It excludes NVIDIA. Okay. The monsters of tech is it's 3 days removed from its all-time high. So you're not oversold. In fact, again, you haven't even begun to sell. Watch NVIDIA though today, because it is the Nasdaq. I mean, Microsoft's up a little bit, but it's the Nasdaq right now. And I have to tell you, okay, it looks like it's about to come off. So we might see some ugly trade start to kind of persist. Again, we're struggling. We're just kind of meandering in the marketplace this morning. It kind of feels scattered and broken. Give it a little time. Trading sessions like this, there's been some heavy volatility. They take time to evolve. Everything you're seeing on the screen right now is just kind of hedging activity. We're getting batted back and forth. But as I said earlier, every attempt to buy this marketplace is going to be met with selling. There are so many people right now looking to get out. Believe me, I'm getting the emails. As soon as we get bid back up, they're like, got to get out. As soon as we get bid back, oh, got to get out. Okay. And then all of a sudden you start spiraling again. So we might be okay, in like a negative feedback loop already, we'll see. And again, you don't see it in NVIDIA, okay? Maybe you do, but be very, very careful as to what and how you're positioning yourself on the longer duration, because that, people, is where things are going to get crazy and crazy in a hurry. In any respect, we're going to turn it over to Jeff Bierman here in just a couple of moments. He's going to be talking about locked in space, the time conundrum of overbought, oversold conditions, part 3. Again, I'm not jumping to fire off any trades just yet, not here anyway. Okay, intraday, maybe I'll find something intraday. In-out spreads, when it comes to in-out spreads, I'm kind of thinking like Costco might be a decent one, like a bearish in-out spread on Costco. Wouldn't mind that one. I am shopping a little bit in Walmart too. Okay. As I said earlier, retail looks like a pretty good place to go. Look, I don't want you guys to think I'm not anti Costco at all, but it would make sense that Costco maybe tests back down to the 700 level. That would be huge for us. Okay. Huge, I tell you, huge. So I'll sit and I'll wait very, very patiently. Costco, though, looks like it's the better opportunity. Walmart, the reason I don't go to Walmart, I don't mean like literally, but the reason I might not do the trade in Walmart, it has nothing to do with the earnings. It has to do with sometimes Walmart is used as defensive stock, and there's just not a lot of defensive players on the board right now. When I say defensive, I don't mean like defense stocks. Okay, I'm not talking about like missiles, but yeah, this is going to be an interesting time you're going to go through right now. So I would suggest to you, and each and every one of you should think about this for between now, the rest of the day, tomorrow, the rest of the week. Okay, you're clearly entering into a period of much more significant volatility in the marketplace. Okay, the final thoughts over here. Okay, we're still, in a lower construct of volatility. Okay, this might be by far and away the highest volatility we've seen in quite some time, but in the grand scheme of things, okay, this ain't squat. So I know that that's a big chart. I know there's 08 in there. Let's even get rid of that. Okay, in the last, even decade, all right, you haven't even awoken the volatility beast yet. You're starting to kick it, but you're not there yet. And you're at a higher end of volatility, just so we're clear. If we were to go back and run like a mean regression, 20 basically over the life of the VIX, 20 has been about the average. I think it's about 7 points higher as a 1 standard deviation move. So I think it's 27, 28 is like a 1 standard deviation move. That's the edge of the deviation. And then another deviation out, I think it's about 35, 36. Okay, that'd be 2 standard deviations to the upside. Again, you're not even coming back to what is, if you will, average over time. S&Ps, once again, are starting to come back off, at least for what it's worth. I think we're actually going to test into the lows overnight here, which is only 10 points lower. Keep in mind, again, okay, a little bit more sell side activity, just a little bit more sell side activity would threaten us. We're 25 points away from the lower edge of the expected move. So we start to see a little slippage, and then bam, we're sitting on the lower edge of expected move. That'll open up your trading day. As I said, every bid right now they want to sell into. Stay tuned. Jeff Bierman is coming on here in just about 1 minute.